Welcome back to Top Business, everyone. This is Joe here again. Passive income is one of the most commonly searched methods on how to earn money because who doesn't want to get money while relaxing on the beach? One of the most accessible avenues to attain this passive income is through stock dividends, which I'm going to discuss with you today. What if you could get paid to do nothing? Let me ask you this. What is the difference between rich people and poor people? Rich people use their cash to buy assets. Poor people buy liabilities. Example, the things that depreciate, or in other words, take money away from you. Sound like an easy enough concept, right? Here's the caveat. When you're purchasing assets, you appear broke because all your funds are going to finance the investments, which you can't show off like a fancy new sports car. When you purchase liabilities, you're broke, but you appear rich because you have new stuff, new cars, clothes, shoes, electronics. But there's no cash left to start building wealth. I want you to utilize your funds to purchase assets. That way you can actually afford the nice stuff that you desire without worrying about the cost. But focusing on the topic assets, when you purchase assets, there are two methods you can get cash. The first way is that you could get paid through appreciation, which is when the value of your investment goes up. For example, you buy a stock for $100 a share, and you allow time to elapse, and the share price goes up to $200 a share, and you sell your stock. You just earned $100 in profit or appreciation. However, you don't actually earn any profit until you actually sell the stock. The second way you get paid is through passive income, which is when you earn money just for owning the investment. So let's say you buy an investment for $100, and now you get paid with a $10 check each year just because you put this capital into an investment that's providing you passive income. There's several methods where you can attain this type of passive income. 1, you can own dividend-paying stocks, which is the topic of this video. 2, you can invest in real estate. And 3, you can lend money to others and get paid with interest. The focus of this video is how you can go from nothing to $1,000 a month in passive income from the stock market through dividends. So make sure you watch this video all the way to the end because you don't want to miss any of these vital details. But before we get into the topic, click the thumbs up button below because if you don't, then the YouTube algorithm will be less likely to show you any of our helpful personal finance and education videos. When you go to the stock market and purchase one share of a company, for example, you buy one share of Walmart. Then you become one of the owners of Walmart. When people go to Walmart and spend a lot of money, Walmart makes a ton of profits. You, the stockholder, make money as well. As I stated before, there are two methods you can earn money. If you go out and purchase one share of the Walmart stock for, let's say, $150 a share, then Walmart announces they're going to cut their prices by 10% across the store, and now more and more people are buying goods from Walmart. As a result, you might have a ton of investors interested in buying the Walmart stock, and these new buyers of the Walmart stock are going to raise the price of the stock. And say for this example, let's say the Walmart stock goes up to $300 a share, and you sell your stocks. You purchased the stock at $150 a share and sold it for $300 a share. That means you made $150 in appreciation solely for owning the stock. However, that's not all. Walmart makes a lot of money, right? Well, at the end of the calendar year, they have this excess cash on their income statement and they need to do something with the excess revenue. In general, a business has 3 choices. 1, save the cash as an emergency reserve. 2, invest the excess profits back into the business. Or 3, give the money to the investors or shareholders, for example, dividends. One of the methods Walmart gives the extra funds to you, the investor, is by paying a cash dividend. This is where I want you to think differently than the majority of the population, because when the masses think of Walmart, they think of everyday low prices and cheap goods. When you think of Walmart from now on, I want you to think of getting some dividends. I'm not telling you what stock to purchase or how to invest your cash. I'm just trying to get you to think differently because at the end of every quarter and every year, Walmart executives are contemplating how much money can we give our shareholders as a reward for investing with our firm. The more shares you own, the larger your dividend check will be. At the time of making this video, fiscal year 2021, Walmart's dividends are $2.16 per share, up from 2% from the $2.12 per share in the last fiscal year. The fiscal 2021 dividend will be paid in 4 quarterly installments of 54 cents per share. What this means in a nutshell is that one Walmart share is a $2.16 dividend this year. If you own 10 shares of Walmart, they'll pay you $21.60 in a dividend. And if you own 1,000 shares, that's $2,116 payout. Not bad for doing nothing, right? I know what you're thinking. This is too good to be true or impossible because I'm broke and poor. I'm going to show you some hacks you can leverage to build up your account and build up passive income from dividends quickly. But first, let's talk about which corporations are paying a dividend because not all stocks pay a dividend. The majority of the firms that pay a cash dividend are mature corporations because these established firms tend to have extra cash reserves at the end of the calendar year. Startup companies don't usually pay out dividends. As stated earlier, there are 3 things that corporations do with their extra funds at the end of the year: save it, reinvest it, reward stockholders. Startup and tech companies are growth companies, which means they're likely to reinvest their extra funds into the firm versus paying out cash dividends to shareholders because they're looking to grow as large as possible in a short period of time. Most of these startup and tech companies are trying to grow quickly, so in reality, they have negative cash flows because they're using debt or investor money to grow their business as fast as they can. So in reality, there isn't any funds left over at the end of the year. In the case they do, their investors will think they're not spending the funds fast enough to facilitate the growth of the organization. If you're looking for large dividends, you're looking for established firms that have massive profits, real estate investment trusts, REITs, and high-yield dividend ETFs. A REIT is a real estate investment trust. When you invest into these vehicles, you're not investing into real estate directly. You're investing into a company that's investing in real estate. By law, they must pay 90% of their taxable income into their shareholders through dividends. For these reasons, real estate investment trusts usually provide higher dividends than other stocks. A high-yield dividend ETF is a fund that invests in high dividend-paying companies. If your goal is to establish a dividend portfolio and get paid via passive income, one thing I could suggest is go and invest into a bunch of high dividend-paying corporations. An alternative is you can invest in an ETF, for example, VYM. Again, I'm not dictating what you should invest your money in. This is just an example. VYM invests in high dividend-paying companies. The advantages of investing in an ETF like VYM are because you're investing into a fund instead of investing with individual firms. That way you're exposed to all high-paying dividend firms. You can see how big a company is paying in dividends like a stock brokerage, webull. So if you want to see how large of a dividend that a corporation is paying, I can just come onto webull and enter the ticker symbol in the search bar. So if I want to look up VYM, expand the data, in this case, VYM pays a dividend of $2.95 a share based on the current share price. For example, for each share purchased of VYM, you'll earn a dividend of $2.95, an approximate yield of 3.58%. Let's compare it to Tesla. You can see that Tesla pays a dividend of 0 because Tesla doesn't pay a dividend. As I mentioned earlier, they're investing all their funds back into the operations. webull is super easy to use. All you have to do is create a free account, fund it, then you can buy or sell any stock, ETF commission-free, because they are a commission-free brokerage, so you can utilize your cash to invest instead of paying unnecessary fees. The best thing is that webull gives you 2 free stocks just for investing with them by using the link in the description below. You get your first free stock for opening an account and your second free stock when you deposit $100 into your account. If you want to learn more, click the link in the description to sign up. It's free. So, you want to make $1,000 a month in passive income from earning dividends, which equates to $12,000 annually, and you want a 3% dividend yield. That means you'll need $400,000 in your account to attain your $1,000 a month passive income from dividends. I guess it's just a dream. This is the hack. If you have a huge desire to win in the passive income department, you have to realize that this passive income dividend game is really a compounding game. It was Albert Einstein that said compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. If you want to get to the $1,000 a month quickly, you need to do these two things. The first is invest consistently into dividend-paying stocks, and second, you must compound your dividends. This is what I mean by that. We will stick with the Walmart example earlier to keep things consistent. 10 years ago, Walmart's dividend share price was $53.45 and a dividend of $1.09 per share, which is 27 cents a quarter. If you spend $1,000 in 2010 buying Walmart stock, you would have purchased approximately 18 shares of Walmart stock because their stock price was around $53 per share, and in 2010 you would have only made $19.62 in dividends that year. In 2020, those same 18 shares would have paid you $38.88 in dividends because their dividends went up. Let me add another variable to the equation. Let's say this go round you don't buy $1,000 of Walmart stock. You buy 10 shares of Walmart each month. In the beginning, that's a $500 to $600 monthly investment. That means over the last 10 years, you would have purchased 1,200 shares of Walmart, and in 2020, each share is paying $2.16 per share. So if you own 1,200 shares of Walmart in this example, that's $2,592 in dividends just for owning the Walmart stock. Now we are inching closer to the $1,000 a month mark. Let me add another variable. You're still buying 10 shares of Walmart each month, but instead of spending the dividend check, you take the funds and purchase more Walmart shares. You're buying more shares each month, but at the end of the year, you'll attain more dividends. That's what I mean by compounding your dividends without adding additional investment cost. If you were to utilize that strategy, you can potentially earn $1,000 a month in dividend income in less than 5 years. If you want to speed the process up, there's a couple of things you can do. You can invest more cash. That way you're growing your account faster. Or you can invest your funds into a stock or ETF that's paying higher dividends because there are funds that pay 2 or 3 times what Walmart is paying. But Walmart is an easy example because most people know about Walmart. To attain the $1,000 a month in passive income, you need 3 things. 1. Right financial education. 2. Consistency. 3. Compounding. That's what's going to accelerate the process. I know this is a lot of information, but remember, investing is a marathon, not a sprint. It's a long-term game, and individuals who understand it are the folks who win over the long run. On the off chance that you folks have liked this video, give it a thumbs up. And if you want to see more of this content, click the subscribe button and the bell icon to be notified when new videos drop. Thanks for watching, and until next time, this is Joe with Top Business. On the next video, Mark will discuss 10 different methods to value real estate.